Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets behind those dry corporate filings to see if a company is really a hidden gem or just full of hot air. Today we're diving into Aclarion Incorporated's latest report, and let's just say things took a bit of a turn after January 9th. So what is the main news here? Aclarion Incorporated, which trades under the ticker ACON, just announced the closing of a significant stock and warrant offering. They brought in some new cash by selling shares and warrants, essentially giving up a piece of the company to get funding. This is a pretty common move for companies looking to grow or cover expenses, but the way it happened and the details are what we need to look at. The company sold over 200,000 shares of its common stock. Now, they're selling these shares for about $5.18 each, but that is not all. They also offered pre-funded warrants, which basically let investors buy more shares later at a set price. They sold a whopping 1.8 million of these. Think of it like this: they sold a base amount of stock, and then sold rights to buy a much larger amount of stock in the future. This means a lot more shares could be out there soon, which can dilute the value of existing shares if the company doesn't grow quickly enough to justify it. When a company issues new stock or warrants, it is often to fuel its expansion plans, fund research, or bridge a financial gap. For Aclarion, this unregistered direct offering, as it is called, seems to be about bringing in capital quickly. The fact that it is a registered direct offering means they have already filed the necessary paperwork with the Securities and Exchange Commission, or SEC, making it a public sale. Now, let's talk about the warrants. These are like options giving the holder the right to buy shares at a specific price in the future. In this case, the warrants are exercisable for one share of common stock each. This is a crucial detail because it means the total number of shares could increase significantly if these warrants are exercised. The company is essentially creating a way for investors to bet on future growth at a price agreed upon today. The important date here is January 9th, 2026. This is when the offering officially closed. This date is key because it marks the point where the new shares and warrants are officially part of the company's financial structure and available in the market. News of this closing was released a few days later on January 13th. You might see some technical terms like par value. For Aclarion's common stock, this par value is a tiny fraction of a cent, $0.00001 per S-hair. This is more of a legal formality than a reflection of the stock's actual market value. What really matters is the price at which these shares and warrants are being sold, and what the market thinks they're worth. Aclarion has checked the box indicating they are an emerging growth company. This means they can take advantage of certain regulatory benefits and reduced reporting requirements. It suggests they are a younger company still navigating its growth phase. However, they have chosen not to use the extended transition period for new or revised financial accounting standards, which means they are adopting new accounting rules as they come out. Just like larger, more established companies, this can be a sign of confidence in their financial reporting and preparedness. Now let's look at what this means for the company's future and its shareholders. Bringing in cash through stock and warrant sales is a double-edged sword. On one hand, it provides the capital needed for operations and growth initiatives. On the other hand, it can dilute the ownership stake of existing shareholders, meaning their percentage of the company decreases. If the capital raise doesn't translate into significant value creation, the stock price could suffer. The company's common stock and warrants are traded on the Nasdaq stock market, a major exchange. This means there is a certain level of visibility and liquidity for their shares. Being on Nasdaq also means they have to adhere to its listing rules, which are generally more stringent than those of smaller exchanges. Looking at the big picture, Aclarion is in a situation where they've secured funding, which is positive. The key will be how effectively they deploy this capital. Are they investing in innovative products, expanding their market reach, or shoring up their balance sheet? The market will be watching closely. The registered direct offering is a powerful tool, but it is only as good as the strategy behind it. So, what is my take on all this? Aclarion has clearly decided that raising capital through an offering was the best path forward at this moment. The sheer volume of warrants suggests a significant potential increase in the number of shares outstanding, which means future earnings. Per share could be impacted if the company doesn't grow its profits proportionally. This is a move that signals a need for growth funding, but it also carries the inherent risk of dilution for existing shareholders. The company's status as an emerging growth company gives it some flexibility, but their decision not to delay accounting standard adoptions shows a commitment to transparency. The trading on Nasdaq is beneficial for liquidity, but investors need to be aware of the potential dilution from those warrants. Ultimately, Aclarion has bought itself some time and resources with this offering. The real test will be their ability to execute their business plan and generate substantial returns that offset the increased number of shares. If they can't, the dilution could become a significant drag on the stock price. It is a calculated risk, and only time will tell if it pays off. Alright, that is our breakdown of Aclarion's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord link in the description for ongoing discussions and analyses. Thanks for watching. See you next time.